understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a positive start, tracking all the global developments that have taken place over the weekend.
I think we've reached a substantial framework for the two leaders who will meet in Korea next Thursday.
If we get a breakout above 26,100, that could really turbocharge bulls and resume the upside momentum once again.
RBI has finally put out these draft rules on capital markets and acquisition financing for banks, setting some clear limits and safeguards for this kind of lending by banks.
25,830, 840. This is the vicinity around which we have opened up.
Hence, if the consumer uptake that we have seen in the last 1 month sustains, I think credit growth also picks up at least by 200 basis points. And that will be good news for financials.
The week has started in the green today. It's almost a 200-point uptick on the Nifty.
The resolution plan may not have been submitted yet, but they have at least received the go-ahead from the Supreme Court that they see no impediment in the centre reconsidering this issue.
Markets in green today. We have come up from the highs, but we have snapped that two-day losing streak. Well, good day so far. A good Monday trade. The Nifty is not at 26,000, though it did hit it on an intraday basis, but still boasting of a 180-point gain on the Nifty, 600 points in the Sensex. Midcaps outperforming with a near 1% up move. You're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema, with me Surbhi and Nigel. Hi, guys.
Well, hi. Really good trading session, actually. But, that's for the headline index, because you look at the advanced decline ratio, it's pat in the middle, 1,400 stocks apiece. So portfolio is not feeling that good. But I'll tell you what, towards the end of today's trading session, you'll want to end somewhere here, because tomorrow is the monthly, the weekly expiry that plays out. And that's what could cause a further short covering bout. So you want to hold around these levels. Last two sessions, we have not been able to hold on to the highs. In fact, we've come off close to 160 to 200 points from the day's high on the last two sessions. So we end here, it'll be a good outcome. Next 60 minutes, crucial.
Absolutely. And, actually today has been better than Friday for sure, because look at the composition of stocks that are moving higher. Some well-tracked, big mid-cap stocks that are actually finding fair amount of traction. Look at First Source, 8% up on First Source. Look at a stock like Hatsun Agro, which is reacting to numbers, 20%. That's the kind of rally that you've got going. Yeah, that's a large cap screen, and we'll talk more about large caps in just a bit. But I'm saying even the mid-cap action is telling you that the mid-cap market, the broader market, is alive and kicking. I'll just throw out some more names. Look at RR Kabel, 6% up on RR. Hudson we'll talk about as we go forward. More names, that are up and about. HBL Engineering, Aether Energy, 5-6% on these names as well. And of course, there are individual stocks reacting to earnings or news flow, the likes of Vodafone Idea, and we'll get to that one as well in just a bit. So short pointers, the mid-cap market is not too bad, and the headline index is holding up rather well. So very decent session, consolidating, taking steady steps, and at least for now, no sign of faltering. Let's pull up the Nifty. The good news is that at least it's managing to hold these gains, unlike Friday when everything was just getting fizzled out. Yeah, that's the Nifty. So far, so good.
And then you've got stocks like Reliance Industries batting for the bulls with a gain of about 2%. We'll talk all this. Let's tell you what we have for you on our show today. The indices kickstart a brand new week on an upbeat footing. The Nifty consistently perched above 25,900, a relative outperformance seen by the broader indices. Meanwhile, it's the metals, PSU banks and metal stocks leading from the front. Big relief coming in from Vodafone Idea. The Supreme Court allows the centre to reconsider the issue of reassessment of the AGR dues. Both Vodafone Idea and Industars higher in trade. Shares of SBI Life rally following a robust show in Q2. The company is eyeing a 13 to 14% growth rate in the current fiscal. Excerpts of our chat coming up in just a bit. Stylem Industries enjoying a strong day. Sources tell your channel that a deal between the company and Japan, Aika Kogyo, may be back on the table. That's a CNBC-TV18 exclusive. A couple of counters reacting to strong numbers, the likes of Hatsun Agro, Coforge. So detailed analysis coming up on these two in just a bit.
How do you position yourself, though, in the final hour of trade? We've got Mitesh Thakur, who joins us back on the show from Bonanza Portfolio. Hi, Mitesh. Good afternoon. Good outcome, right? I mean, we're still holding with close to 180 points. what would that level you'll be looking at in terms of a resistance level? And if you had a positive bias, where does that get negated?
Nigel, I think there's some problem with the video. Can you hear me?
Yeah, Mitesh, we can see you and we can hear you clearly. So if you could give us your call on the Nifty, which is holding with a gain of around 180 points. Please go ahead.
So on the Nifty, I believe that we are heading towards this retest of previous highs of 26,180 to about 26,230. These are the closing basis numbers. And once we clear them, I think we could even gather or gain more momentum because the medium-term charts are strong. In case we fail, I think we can come back to about 25,800 and in the worst-case scenario, 25,600. On the stock side, I have a buy on Grasim with a stop at about 28.80 for targets of 3,000. And Imber is a buy with a stop at 84.60 for targets of 85.50 plus.
Okay. All right, got it. Mitesh, thank you very much for that. Well, let's straight away get to the big story of the day. And it indeed is a big story because after several years, there seems to be some sort of a change in the works when it comes to the AGR issue and Vodafone Idea. The Supreme Court today has allowed a review of the AGR matter, saying it sees no reason not to allow the centre to reconsider the policy stance. Ashmit is here with more details. How many times, Ashmit, Vodafone Idea has gone to court asking for some sort of a relief? So tell us exactly what's happened today and whether this indeed opens up some options for the government.
Well, it indeed does. Vodafone Idea knocking on the doors of the Apex Court on multiple occasions, finally getting a positive response. Bear in mind that this time the government was batting in their support. The government was saying that, look, there is a complete change in facts and circumstances. The government said that we now hold 49%, and by virtue of the government stake, that necessarily means there's public interest involved as well. Went on to say that over 20 crore customers will stand to be impacted if Vodafone Idea goes south, and also said that this will also affect the competition in the larger telecom sector. Now, all of these aspects weighing on the minds of the Supreme Court saying that, look, this is a policy matter. We do not want to intervene. And on the contrary, the Supreme Court saying we want to give the centre a free hand. Given that it is a policy matter, the centre should be the one to decide the future course of action, to any relief that needs to be worked out, any structure that needs to be given as far as the AGR issue is concerned, legacy issue going back a couple of decades here. The centre finally now being given a free hand in terms of deciding in what shape and form they want to grant relief as far as Vodafone Idea is concerned. One aspect, one caveat to bear in mind, the Supreme Court also pointing out that they're granting this relief, they're granting this blessing on account of the peculiar facts and circumstances of this particular case, which of course then raises the question that will it also be applicable for any relief that is to be granted to Bharti Airtel as well. Clearly the ball is in the DOT's court. They will now have to take a call on what shape and form the future course of action will take. The Supreme Court saying we will have none of it. The DOT, the Supreme Court opening up, freeing up DOT's options.
For the last several years now, not even months or quarters, but for years, Ashmit has been at the Supreme Court giving us the latest updates on this case. But now I think Ashmit is going to be at the Department of Telecom to get us the latest moves on this story. Ashmit, thank you so much for that. Actually, let's toss it to Rima. I mean, our in-house expert on telecom. Rima, we got so tired of constantly hearing the matter being struck down at the courts.
Yeah.
But now the centre can exercise options. But what sort of options are we talking about here?
Well, I can think of three, and maybe there are there may be other aces up their sleeves. But the three that I can think of up front is one, extend the timeline by which Vodafone Idea has to repay their AGR dues. Remember, when the telecom relief package was struck, they got a 4-year period, you don't make any payments. And after that, over a period of 5 years, repay those dues. So the moratorium, the repayment period comes to an end in March of 2031. Maybe the government says take another 20 years, right? Extend the timeline. That's one. Secondly, remember the AGR dues has a component of principal, interest, penalty, and interest and penalty. Maybe they can say that only pay the principal amount, don't pay at least pay part of the interest, or don't pay the interest on the penalty, don't pay the penalty.
And the total, including the original amount, the interest, the penalty, all of that is running into about 70,000.
Some say 80, some say, it goes up to 84, 85,000 roughly. And the third thing is that the company, all the telcos actually have been saying that there are mathematical errors. There's been double counting, right? So maybe the government sees that, listens to that advice and rectifies some of those. So that's some of the options that we can think of. Maybe there will be something different. But how does it help? Vodafone Idea could be a game changer because one, it eases the cash flow burden. And two, it will help the company maybe go ahead and get that bank funding of 25,000 crore rupees, which up until now has been elusive. What is unclear right now is whether any form of government relief will be applicable only to Vodafone Idea or does it extend to the other telcos? Because as Ashmit pointed out, the Supreme Court order, the order states that this is applicable only in the peculiar facts and circumstances of this case, given the 49% equity holding of the government and the 20 crore customers. But the lawyers we spoke to pointed out that since now the matter is in the government's hand, they have the flexibility, they have a free hand, they have a legal cover. So if they want, maybe they can extend it to the other telecom companies as well. But the other beneficiary is Indus Towers, because a stronger Vodafone Idea will help the company resume its capex spending. Its capex will directly benefit Indus Towers. And remember, Indus Towers, because of the financial constraints at Vodafone Idea, had stopped paying dividend. And investors were waiting for the company to resume dividend payouts. So, it's an entire chain of events. But if Vodafone Idea gets stronger, if and when it does, then it starts its capex, which eases the cash flow burden of Indus Towers, and then it can start repaying dividends. So let's get in. Dipan Mehta, Director, Elixir Equities. Dipan, you want to weigh in on the matters of the court?
Rima, good afternoon and thank you for having me on your show. I think it's very, very positive news for Vodafone because from whatever you reported, and I heard it here first, it kind of gives an open-ended canvas for the government to work out how to make Vodafone viable again. And I particularly like the fact that in the submission they have said that they are worried about competition, they're worried about 26 lakh subscribers. So the whole tone and tenor does appear that anyhow they will keep Vodafone alive and sooner or later it should get back into profitability. So I think it's great news for Vodafone. And I think a lot of investor interest also may come back because at the end of the day, the telecom industry has created a great deal of value. I think look at the stocks that are done really well. Bharti Airtel has been a stark outperformer and a lot of Reliance Industries gains have come because of Jio as well. So if you have one more vehicle to invest in the telecom industry, I think investors look at it quite closely. So I'm now going to track Vodafone far more closely than before. I had written off this company, but let's see what the government has plans for. And if they eventually, as expected, merge BSNL also into it, then you would have a solid third player and then hopefully efficiencies will start to kick in.
Okay. Dipan, hi. Good afternoon. Good to have you in. Reliance Industries. Let's talk about the big boy. It's really getting fired up, right? I'm not sure about it. It actually started after the results with the retail arm doing really well and telecom's been very steady. Plus, of course, all the new investments that they're making on their the new businesses, the joint venture with Meta, their investments in AI. There's so much going on. What thoughts now at this price?
Yes, a good afternoon. The only thoughts is that is it going to become a holding company? Clearly the indication from the management is that they are going to launch an IPO for Jio platforms. And that means that as minority shareholders of Reliance Industries, there's not, as of now, doesn't appear to be much to gain from because the holding company discounts will start to creep in. And a lot of the investors who are buying Reliance Industries because of the telecom initiative may now sell Reliance Industries and just buy Jio platform when it gets listed. So I've always felt that, the way the Adani Group has kept on splitting its holding company and listing separate businesses and creating value, that should be the route which Reliance should have taken. But anyway, management is wiser and they feel that they should do IPOs. But from a minority shareholder, that doesn't work out for us as well. And generally, it's a very, very complicated company also now. So it's got a large weightage in Nifty and Sensex, so you can't avoid it. You have to have it in your portfolio. But I'm not so sure that it can, Reliance Industries per se, as a holding company, can provide a decent outperformance as compared to Nifty and Sensex.
Dipan, in the past, you've liked some product-related IT companies. But what about a company like Coforge, which has been delivering quarter after quarter, and now it's even addressed the free cash flow issues, the concerns the investors had. What are your thoughts on that?
Rima, you're also an expert on tech. You tell me there are two companies in the software services businesses, only two companies Persistent and Coforge, which defy all expectations. And at the end of the day, they appear to be like any of the other software services companies like Infosys, TCS, Emphasis, and LTI, Mindtree, and all of these companies. Yet these two companies, I'm sure, are doing something different, which is why they're able to generate these kind of growth rates. And very, very impressed with both these companies. As a measure of disclosure, they're the only two companies in the software services space which we are positive on and have invested in. So I think that it's a consistent trend that these are outliers and they're trading at extremely high P multiples, fully justified. So as such, I would remain invested in them and look for buying opportunities at corrections.
Okay, all right. Dipan requested to stay with us. Let's shift focus to the top Nifty gainer, SBI Life. This morning, Yash told us these numbers look good and bang on. It's doing pretty well. Yash joins us actually to now break it down for us. What's worked for the insurer in the past quarter? Yash, take it away.
Well, Nigel, as we discussed in the morning, the numbers were pretty strong ahead of what the street was anticipating, and the stock responding perfectly to those numbers. As far as the numbers itself are concerned, a beat as far as CNBC-TV18 estimates are concerned on most counts. Total AP was a beat, retail AP was a beat, VNB was a beat, and most importantly, the margins, they came in about 100 basis points, higher than what they did last year in the same quarter. That was the first reason, strong numbers. The second reason was the stock positioning itself. The stock hadn't done much in the last 3 months, in the last 1 month. In the last 3 months, it was up just by about 1.5%. In the last 1 month, up by about 3%. So, of course, it had that runway to respond well to a strong set of numbers, which it did. Finally, as far as valuations are concerned, not the cheapest, but not the most expensive stock. Also trades at 1.9 times price to embedded value, FY27 forward, compared to HDFC Life and Max Life, which trade at 2.2 times FY27 price to embedded value. That was the next reason. And the final reason, strong management commentary. Despite the big GST shakeup which came, which meant additional costs for insurance companies, SBI Life management has gone ahead and maintained the guidance when it comes to growth. That is 13 to 14% for APE as well as VNB, as well as on the margins, that is 26 to 28%. All these four factors working well and reflecting in the stock move today. We spoke to the management, the MD and CEO, Mr. Amit Jhingran. Here's a slice of that small conversation.
What we are seeing in the month of October is also pretty strong growth, and based on that and with the help of the GST impact, we expect that the second half growth will be higher and we will be able to stick to our growth of 13-14% on APE basis.
So you expect H2 growth to be about 18%?
Yes, much better. Going forward, we expect that with the help of this product mix and the impact of GST will be balancing out. So we will stick to the range of 26 to 28% for the entire year.
Okay, all right. Dipan, what do you think? SBI Life coming back to life, stock doing very, very well and good numbers appreciated. But when the stock holds on to those gains, that's how the street likes it. What's your view?
Oh, Nigel, I think insurance companies generally have been doing decently well. Even HDFC Life, ICICI Pru, decent numbers coming through. They appear to be steady compounders. Typically, the way to value them is based on the embedded value. And the embedded value keeps on growing up by about 15%, 10 to 15% or so. So these are great compounding stories, good defensive stocks as well. And in a way, I think with financialization of savings, insurance companies will benefit. But end of the day, there's hardly any scope for innovation and it's heavily regulated. And if you see the kind of growth in the life insurance companies, their growth rates are generally kind of, they converge to a particular level, the industry as a whole. So from that point of view, it's a nice, sedate business to be invested in. But in markets like this, Nigel, I think, which are about to break out, I think investors should expect higher returns. So I would say insurance companies are great defensive bets, but depending on the market conditions, there could be better opportunities.
Okay, that's SBI Life. By the way, I just want to point out, look at some of the exporters, the garment exporters, and this is what we were saying on Friday as well. You need to be a little careful while looking at some of these trades because they were very excited on Friday, actually towards the end of last week, on prospects of this India-US trade deal, but they're cooling off today. Kitex Garments, for instance, is down 5-6%. Gokuldas Exports is down about 1% as well. So let's pull up Pearl Global if we can as well. Yeah, Kitex is down 6% now. Basically, no sign of clarity or actual concrete progress, at least as of now. So some of the stocks are cooling off. Deepan, what else? Anything new in the mid-cap market? Anything that's, caught your attention looking at the earnings?
Oh, that's quite an open-ended question.
Yeah. Take your pick. Give us anything new?
No. I don't think that, these kind of, where they're going to regulatory issues over here. But I've always maintained that, we like the platform companies per se. And one company which comes to mind, again, usual disclosure, we and our clients are invested in it for a long time. Zaggle Prepaid's numbers, we're looking forward to it quite keenly. And it's a great fintech company on a longer term basis as well. It has come up from its high significantly, providing an entry opportunity. I've been tracking it from listing. That time was 60-70 times P multiple. Now I think it's more about 50 times or so. And they're keeping on increasing their market share. No competitor which is listed or which is somewhat close to what they are doing. And I think they provide excellent services to corporates who want to improve and get more cost savings from what they pay their customers, what they pay their vendors and their employees. So generally positive on this company. Having said that, it's a company in which we are invested, so our views could be a bit biased.
Deepan, hold on. We wanted to get your views in on this CNBC-TV18 exclusive where sources say a deal between Stylum Industries and Aika Kogyo is back on the table. Yash joins in with the details. Yash, am I pronouncing it correct?
Well, that's correct. You're pronouncing it correct. And what we've been given to understand from our sources is that the transaction between the Indian-listed Stylum Industries and Japanese-based Aika Kogyo is at an advanced stage. What we've been given to understand is that a share purchase agreement between the two companies could be signed soon. Remember, CNBC-TV18 had reported on this transaction about a year ago, after which it hit a roadblock. But what we've been given to understand is that the deal got revived about a few months ago, and now it's reached an advanced stage. What we've been given to understand is that Aika Kogyo is looking to acquire a majority stake, which is 51% or more stake in Stylum Industries. And this could be done in a way where the first 25% is expected to be acquired from the promoter and the promoter family of Stylum Industries, which would then trigger an open offer whereby Aika Kogyo would look to acquire about 26% stake, depending on how much stake comes through that open offer. If entirely 26% comes through, then of course they reach that 51% mark. But if it doesn't, then for what the stake falls short to that 51%, they would acquire additional stake from the promoter and promoter family of Stylum Industries. Importantly, what we've been told by our sources is that the deal is expected to happen between 2,200 to 2,500 rupees per share. So that's an important update as far as the valuation and the pricing of the transaction is concerned. And as always, we've written to all parties involved in this particular deal, including Aika Kogyo and Stylum Industries. A response from both of them is still awaited.
All right, thanks a lot for that. Yash, that pricing point last time was a deal breaker. So let's see whether or not it does come through. Deepan, any view on this name, Stylum? I recall explaining this company around 7-8 years ago. It was very small at that point of time. Most of its focus is on exports. And the promoter entity, that's the Guptas, they have been having a bit of a feud between both the parties. They'll have to come on board, then this deal is to get through. And in fact, the pricing has to be favorable as well. Your view on the company at around 2,000 rupees or?
You are looking for new ideas. I think this is certainly a new idea. And valuations are reasonable. And the promoter change to a Japanese company will be very well received by the investors. Generally, there's a great deal of fancy for MNC companies or these FERA companies, for lack of a better word. And building products per se, we're very positive on that industry because of rapid urbanization. And export markets also are great for such companies. And with a foreign holding company coming into place, that could be an impetus area. So generally looks interesting to me. And let's all track this particular development if it actually comes through or so. And if it does, I think there's certainly a good trading rally possible in this stock.
Okay, we'll leave the conversation here for now. Thank you very much, Dipan, for joining in. We will get into a break, but as we do that, it's time to highlight our Super Pro chart of the day, powered by Money Control Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the markets and help you understand the why behind the what. Here is today's chart and what it means for your next market move. Bharti Airtel is a stock on your screen. And as you can see, a rectangle pattern, bullish breakout, indicates a period of consolidation followed by a strong upward move, signaling trend continuation with high volume support.
And if you'd like to access more expert-driven insights and actionable chart patterns like this one, simply scan the QR code on your screen and subscribe to Money Control Super Pro. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. So the markets had a steady day of trade so far, and actually the mid-cap market is doing pretty okay because the mid-cap index itself is up far more than the Nifty, almost 1% higher. Hormuz is here to go beneath the surface and tell us where the action exactly is. Hormuz?
Beneath the surface, of course, now you have earnings reactions, and that's how it's going to be over the next few days. And you start off with Hats and Agro, that's topping the list today for obvious reasons. The earnings reaction, 20% circuit, the biggest single day gain that the stock has had since February of 2020. And the stock has gained in 3 out of the last 4 sessions. But the volumes today, of course, before that 20% circuit, with 17 lakh shares have changed hands today. The 20-day average is only 1 lakh for Hats and Agro, and as a result of this 20% move, the stock has moved higher than all of its key moving averages. And also as a result of this move, October has become the best month of 2025 for Hats and Agro. And as a result of this move, the stock has also turned positive on a year-to-date basis. It was an underperformer last year, it was down 12%. Now PSP Projects is the other one. There's no specific news trigger behind this. Still the stock is up 17%. It's the biggest single-day gain that the stock has seen since listing. And the stock has gained 4 out of the last 5 sessions. The volumes are the highest since July, so just a 3-month high. But Close to 75 lakh shares have been traded on PSP projects today. The 20-day average here is only 85,000 shares. And here too, October has become the best month of the year, and it's had a pretty good year so far. It's up for 43% year to date, the best year that it has had since 2022. Now, Wanbury is the third name on the list today. Before this move, the stock had a 7-day losing streak between the 10th to the 20th of October, and it has recovered all of those losses in this move that it had during those 7 days, and the stock is up almost 9% in the last 2 sessions. And today's session has had close to 6 lakh shares that have been traded. The 20-day average here as well is only 75,000 shares on very strong volumes again. The stock is just above its 200 DMA at 253. Now the next level comes up to the 50 DMA, which is at 259. Still an underperformer this year, down 13%, but the previous 2 years the stock had more than doubled in value in both 2024 and in 2023. And lastly, some profit booking finally coming in GM Breweries. The stock, this is only the third day that the stock has declined in the month of October itself, and from start of the month till last Friday the stock was up 80% in the month of October. But today's fall, the 10% circuit, is on volumes that are lower than its 20-day average. So 20 lakh shares have been traded. The 20-day average is 25 lakh shares, and that's of course courtesy the heightened trading activity that you have seen in this month. And despite this 10% downtick, the stock is still up 62% just in the month of October itself, and the stock was up 44% in 2024.
Okay, all right. Thanks a lot for that, Hormus. Let's get in our market expert then. We have Mithun Ashwath, Managing Partner at Keep Advisors, who joins in. Hi, Mithun. Good afternoon. Good to see you in. Hope Diwali was rocking for you. Well, this seems to be a bottoms-up market. So if you could tell us, you could share a couple of ideas with us first from, if you're looking at it from a 12 to 18 months time horizon, what would that be? Which one would it be?
Yeah, afternoon, Nigel. I may not want to discuss names because we may be in the, we may have advised.
That line has snapped a little bit, so we'll wait to get Mithun, back on the show. But he was going to share something with us, so hopefully we get him back. By the way, pull up the intraday chart of EPAC Prefab. The stock recall was down close to 3%, and the volumes are quite large. I don't know whether something has happened to that, but the stock has suddenly, seen a big spurt up, volume spurt, as well as, the stock has moved into the green from trading in the red. So that's one stock actually that comes up for you. And Agility should come up for you. That's up 2%, but the entire 2% has come in this hour. Mithun, you were sharing that idea with us. Please go ahead.
Yes. I may not divulge names right now, but I will just give you a sense of what we're thinking. I think, the last few months, we've seen the markets kind of consolidate and really not correct that much because of domestic inflows. But what we actually I think we're coming to a juncture where, global markets have done well and India is doing a little bit of a catch up. We do expect, maybe even the foreign institutional investors to start investing into India. And we could go a lot higher in the near to medium term over the next couple of quarters. Primarily because, I think the results in Q3 and Q4 are going to be good compared to last year. Also, we do think a trade deal is kind of in the offing. It may happen maybe post the Bihar elections is our sense. So this is a good time to look at ideas, good companies, which may have just been in a range for the last year or so, or 6 to 9 months, primarily because of the concerns on the geopolitical front. So the kind of names on the textile front, you could buy the leaders there, which have kind of consolidated, good businesses, but have been hampered by this extra tariffs. There could be several plays even because of this tariff correction. So I think there's an opportunity there where you can spot good companies which have corrected only because of this reason. And as you know, right, the company's value is not just based on 2 quarters results, but if you do a DCF to the future, a lot of these companies present good opportunities.
Mithun, name a couple of companies, right, with due disclosures. What have you all bought recently? Not a recommendation, all disclosures taken on board.
Sure. Something that we have been looking at is, I think we've held it earlier as well. A company like Arvind Limited, something that we are quite positive on. We've also liked Gokuldas Exports, but it has run up quite a bit. But these are the type of names that come to mind, which could be opportunities. They have gone up a bit in the recent past. So one should look at maybe corrections, because obviously the volatility based on these trade negotiations keep happening. But I think these are a couple of good businesses for the long run. Say, for example, Arvind not only has the garments business, it also has the advanced textiles business as well, which they have now subsidiarized. So that could also form a type of value unlocking in the future.
Got that. Arvind, by the way, there is some news coming in from reports. The first hike post 2019.
The government is, approved an increase in ad rate for print media by close to around 26%. This revised ad rates are likely to apply to government ads in newspapers from the second week of November 2025. And this will be the first hike post 2019. So because of that, the stocks are excited. HD Media seen a big spike up in the stock. Even DB Corp as well.
5% surging away, 26% from the government, and that's coming ahead of the Bihar elections as well. So, I mean, this is a hike from the central government. Bihar elections, so separate state phenomena. Yeah, Nigel?
So some back of the envelope calculation suggests that, DB Corp, I'm reading a note coming in from Elara yesterday. DB Corp could see a 3% revenue boost in the next couple of years on the lower band of 17% ad share. So, that's a rough number. Margins could improve as well. EPS could improve by close to around, I think it is 9% approximately in FY27 as well as FY28. The overall ad revenues is 70% of DB Corp's revenues, of which print contributes a major 64%.
Okay, all right. Big move on these stocks. Mithun, hi, good afternoon. Good to have you in. Almost a forgotten sector, right? And there are very few pure play print media listed stocks. DB obviously is reacting, it's one of them. But overall, any interest in the media space?
No, Surabhi. I don't think we've looked at anything on the media space directly. We've tend to maybe more be positive on the internet sort of companies where they'll obviously gain from sort of from media spends. But not any of these, the old age media companies. They're obviously very valuable in terms of, because they're most of them have net cash and trade at very low multiples. But I don't think there is any real trigger for these stocks to re-rate.
The question is, will it come before the Bihar election or after? Because there is that moral code of conduct for the Bihar Assembly elections. So will they wait for it to be lifted before the hike comes into effect? Mithun, I remember from our previous conversation, the broader tilt was more towards capex. So you had liked a couple of these defense names, BML, HAL, Bharat Dynamics. I may get the numbers wrong, but there was this tilt towards manufacturing defense. Now, increasingly, the interest has come back in consumption names. I mean, how is your portfolio now looking in consumption? Which are the stocks that you are active in or present in that you're recommending?
So I think on the consumption side, I think last time we spoke about and has done quite well is TVS Holdings. On the auto side, it's the holding company of TVS Motors and trades at a massive discount to the value of TVS Motors that it has. It's almost a 65 to 70% discount. They have about 51% in TVS Motors. They've also got bought into a stake into a NBFC business as well, which should add value to their portfolio going forward. So I think that primarily is going to be an NBFC plus the value of the TVS Motors that it has. So we've been kind of positive on the auto discretionary space. I think those are going to benefit obviously from this GST cuts that we've seen. We've already seen the numbers in terms of the sales really perk up. And I think that will be visible in the Q3 numbers, less so in the Q2 numbers. I think also, there's been spaces like the consumer durable side, which also should show good growth in Q3. So I think that's something that we like. Having said that, I think we continue to be very positive on the defense space. I think that's a multi-year sort of a story. We've spoken about companies that we've liked earlier, like Bharat Forge, which is more of a holistic play, not only defense, it also has exposure to auto and the exports. So the tariff situation kind of blows over. That again becomes an incremental positive for companies like that.
Okay. All right, Mithun, we'll leave it on that note for today. Thank you very much for joining in. Good conversation as always, and we look forward to the next one. That's SRF. Numbers coming through 21.3% versus a poll of 21.7%, more or less in line.
I think there's a bit of a miss on the profits. And revenue is also about 7-8% lower. There you have. The net profit is a bit of a dampener, 388. We'll wait for the versus figure, but 388 is a miss compared to the 450 crore we were anticipating.
Yeah, and even the top line at 3640 is lower by about 200 crores versus at least the estimates. That explains the sluggishness on the stock.
But the versus for PAT is actually 201.
Okay.
So in that context, it's still, I think, what, an 80% up
It's a jump,
yeah,
but
it's a jump.
maybe the street was expecting more.
Street was expecting more. I think the only estimate was Jeffries. I'm not sure if, I think we'll just wait for Sonal, but it looks like a bit of a miss.
Okay, well, in the meantime, let's do one thing. Let's go across and figure out what's happening in the FNO market, what the cues are there. Like, Nigel, fill us in.
Well, we're approaching expiry day, right? So the call writers, well, they are getting a little bit nervous with the kind of move that we have seen. But we'll need to get past the 26,000 odd mark to expect a bigger short covering bounce. And I'll tell you why. Just take a look at the 25,900 call. You know, those call writers, they were sitting pretty. Last couple of trading sessions, the bulls, you know, they couldn't hold on to higher levels. But today, there's big unwinding out there. All those call writers, they're scampering for cover. On the flip side, the put writers are coming back into the game. So you have the 25,900 put. The premium out there is down by more than 60%. So those writers, you know, the premium at the start of today was close to 150 rupees. That's come down to 30 rupees. Now they are counting on the 25,750 odd mark, holding out in the near term. If you look at the 26,000 put, the premium out there is down by close to around 70%. So there's aggressive writing being seen out there. The premium at the start of today, by the way, was around 225 rupees or thereabouts. So just in the near term, that's tomorrow the expiry that plays out, you don't want this 25,700, 25,750 mark to hold out on the downside. And you'd like to get past the 26,100 on the upside. Stocks in focus, big boy Reliance Industries. The last 10 trading sessions, that's been the outperformer. That's been doing the heavy lifting. And the clear signs of fresh buying on that particular name. On Polycab, the street seems to be sensing something, because there's a big open interest built up out there in the next contract. In the near-term contract, there is a bit of a rollover that's taking place, and the stock is up close to 2.5%. Massive volume in this one. The street is sniffing something, so we'll keep an eye out on that stock. And SBI Cards as well, one of the biggest underperformers for the last couple of years or so. Out there in the near term, there is some unwinding of positions, and there are shorts being taken in the next series. That's in the November series. So that's about all the action for the time being. You know, just one trading session to go in this series. It's been a good one for the bulls, but the 26,100 seems to be a bit of a resistance mark. Back to you.
Thank you very much for that. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter and a few BTST calls.
Welcome back. Well, pull out Welspun Specialty Solutions. That's been a company, that's been unable to really ramp up revenues. But just prima facie, looking at the set of numbers that they've delivered, this time around, the revenues have spiked up. I think they had a part shutdown, but despite of that, 239 crores is what they've delivered, and they've swung into profits. Welspun Specialty Solutions, I think we should get that stock up for you. There's a big surge out there, and it appears there's an operational beat, in that particular set of numbers. That's why that stock is surging away. And remember, they'd raised some money last year, so that's why the finance cost has come down drastically from around 10-11 crores run rate on a quarterly run rate. That's come down to around 4 crores in terms of the finance cost. So explains why that stock is spiked up. But it's that time of the day where we get a quick check in D-Street Chatter. Nimesh joins us to help us out with that. Nimesh, what are you picking up? How are you looking at trade first?
Hi, Nigel. Very strong day for the markets. The Nifty is up almost 170 points. But the good part is that now it's spreading over to the broader markets as well. The mid-cap index is up nearly 1%. A lot of individual stocks are up between 10 to 20%. So clearly, after what we saw in the last 10 days, only Nifty participating. Now it's turning a little broad-based as well. From a flow perspective, again, a mixed day. I still feel there could be a small sell figure from the FIs. But two sectors which stands out in terms of buying is OMCs as well as the PSU banks. These are two sectors where there is well bid and buying as well from large institutions. So clearly that stands out. I guess from a very near term, apart from the earnings, the Indo-US trade deal, that's a big trigger to watch out for. If that gets taken place, you'll see further short covering and fresh buying as well from the FI. So November could be quite interesting, largely from the fact that if the US deal has to happen, you might see further short covering rally. So that's the base for the new series. But looks like now it's spreading out, and there is a larger participation in the broader markets as well from institutional investors.
What about stocks, Nimesh?
Well, so the first stock on my list is Bajaj Finance. It's not showing up in the move today, but I understand there is very strong delivery-based buying in Bajaj Finance today. Looks like some large FIs seems to be accumulating Bajaj Finance at this level. So watch out for that first name. The second name is Indegene. The stock has been consolidating off late, but I understand the selling pressure from a leading AIF is largely over with today's block. There is a small block today, and it looks like it's a clean-out trade from that particular fund. So maybe disclosures could be interesting there. The last name is Shriram Finance. That's been buzzing in the last couple of days. But again, there is a lot of anticipation and buzz of a large deal in Shriram Finance as well. But interestingly, for the second day running, there is a very strong FI selling. So while the stock has been in momentum, it looks like some larger FI seems to be at least trimming the positions in Bajaj Finance.
Okay, all right, got that. Nimesh, thank you very much for joining in. Indeed, there's a lot of buzz around Shriram Finance. So let's see whether something's indeed coming through. With that, let's head back to Mitesh for some final ideas for the day. Mitesh, fill us in. Any new trades coming to mind?
Yeah, I have BTST on emphasis. I think that's closing with strength. So BTST with a stop at 28.75 for targets of 29.10, 29.15 for tomorrow.
Okay.
And the other one is the other one is General Steel and Power. I'll just finish that. General Steel and Power is a BTST with a stop at 1,027 for targets of 1,050.
Okay, fair enough. I think we'll have Ambrish joining us in the next couple of minutes as well. We'll discuss more stocks with him. Before we get to Ambrish, we have Mangalam to tell us what exactly has Hatsun Agro done in the second quarter. That the stock has become a rocket 20% on Hatsun Agro. Clearly, those numbers have hit the mark and more. Mangalam, tell us, circuit.
It was a strong performance that came in from Hatsun Agro in their second quarter. A consolidated revenue growth of nearly 17%, also further aided by their acquisition of Milk Mantra. But overall, the margins were good. Year on year, there was an improvement in the gross margins, which we saw in the previous quarter as well. So quarter on quarter, they were largely stable. A mild decline is what we saw. But that has supported the EBITDA growth, and that has gone all the way down to the bottom line. So 17% revenue growth has resulted in a 35% EBITDA growth. Margins came in from 11.6% to around 13.5%. And the net profit on that base increased from 64 crores to 109 crores, which is almost a 70% jump. Gross margins staying stable around that 31-32% mark, so that's a positive. And more importantly, remember, the stock hadn't seen a big rally. In fact, it was about 15% away from its 52-week high going into these numbers, and as a result of which, we saw that big move after a good set coming in for the second straight quarter. More importantly, what this also did was caused a rally in all the other dairy stocks. So if you pull up something like a Parag Milk or even a Kotla Dairy. All these stocks saw a big surge after Hatsun Agro's numbers. But importantly, even Nestle in its commentary did point out that going forward, milk prices, procurement prices are likely to decline, which is largely margin accretive for all these dairy companies.
Okay, there's more news on SRF, by the way. The CFO is stepping down, effective 12th of December. We'll just see if they've given out any specific reason or whether he's just moving on for personal reasons. That's led to an immediate downtick on the stock. SRF now down 2.5% after anyway revenue and profit that's missed expectations in this quarter. More on SRF with Ambrish and of course many other stocks to discuss as well. Now Ambrish is also, by the way, the money control super pro expert. He's a SEBI registered market professional who tracks market movements and identifies trade-worthy trends for super pro subscribers every day. Ambrish, good to have you in, and good for the money control super pro subscribers that you're offering all of this advice over there. Actually, let's start with SRF. What thoughts? Clearly, the numbers are a bit of a miss, and then there is the CFO resignation.
Yeah, I mean, that's, I think, a bit of a negative. I mean, both the numbers as well as the CFO resignation. But then I would say that this could be a short-term negative. In fact, I expect the numbers to be better possibly over the next 2 or 3 quarters. So this correction, in case we see a decent correction, I think it's a good opportunity to buy.
Okay, correction is a good opportunity to buy. By the way, there's one mid-cap IT company which has hit a new high, and that is eClerx. It's a small BPO sort of, it used to be earlier more of a BPO company, but it's a stock which is up 37% year to date. In the last 1 year, up 72%. And today, it's a fresh 52-week high on eClerx. So at a time when many of the IT companies are 15-20% away from peak levels, you've got this company which continues to surge. Ambrish, any thoughts on Lenskart? Have you done any early analysis? Because while there is a growth story, there is opportunity of penetration, absolutely. It's also expensive.
It is expensive, but then with some marquee investors supporting it, I think that's the reason why there is a decent amount of interest in the market as far as Lenskart is concerned. But let me tell you that I've not really done a deep dive into the figures, which I should do over the next 2 or 3 days. But overall, like rightly said, it is expensive, but then I think it can give a decent amount of bump up on listing. And that's what most of the IPO investors look at as to what sort of a listing gain one can make.
Okay, all right, Ambrish, I'll tell you what, we give you a few minutes to think. We'll take a short break, come back. Ambrish will give us the stock that he has on his radar. You stay with us, get into that break and come back.
Welcome back. Interesting news coming in on Reuters that the government may allow direct FDI in PSU banks up to 49% versus the current limit of 20%. So this means the government of India will retain majority control. But there has been interest by foreign entities in the Indian banking system. But for PSU banks in particular, although the current limit is 20%, many of them actually have very high ownership of the government of India going up to 90%. But any money which comes into the PSU banks will be a big vote of confidence for PSU banks. That's what government sources seem to indicate to Reuters. Amrish,
I think the one that spiked up is IDBI Bank. Because that's the next one on the government's radar. So we'll have to keep an eye on that.
Actually, all of them, like Bank of Maharashtra, Bank of India, PNB, State Bank of India has been strong. But across the board, you can see some uptick coming through in these stocks. Amrish, a quick comment if this does come through, does go through, I'm sorry.
I think this is very positive because, first of all, we've been seeing that the earnings have been improving for these banks, PSU banks, in the last couple of quarters. And now, in fact, there's a talk of consolidation. So we'll finally end up with possibly 5 or 6 large PSU banks. And along with that, if like foreign institutions are allowed to invest more than what they could earlier, I think that's clearly positive.
Okay. By the way, there's also some news coming in on EMS companies. The government has announced 6 companies that have received approval for the electronic component manufacturing scheme. The names are obviously well known: Keynes, Syrma. They've all received approval. Actually, even SRF has received some sort of an approval on this. And the total investment on this scheme stands at a little over 5,500 crore rupees. Amrish, EMS, any picks here where the valuations still look attractive enough and the growth prospects justify those valuations?
I mean, growth prospects are great, but most of the stocks are already quite expensive. But then because of this news, it can move up some more. You could see possibly another bump up of about 8 to 10%. But from an investment perspective, at these levels, I will possibly be a bit cautious. I'll just stay out.
All right. The stocks actually are seeing a bit of an uptick. If you look at Keynes as well, there's positive rub-off. The stock has moved up. Syrma as well, I think, is cutting its losses. So that stock as well has moved up a little bit in the last few minutes or so. Amrish, I want to ask you quickly about OMCs. You had CPCL and MRPL that came out with a set of numbers. No problems on the refining GRMs. Now the street is saying the marketing margins as well could look okay. And from midday itself, you're seeing HPCL, BPCL, IOC. IOC, I think, comes out with a set of numbers. They're actually doing well. Very risky and tactical play, but do you think OMCs is something you look at?
See, there are 2 things. I mean, on the positive side, we clearly have the Singapore GRMs really shooting up. So I think from that point of view, it is positive for most of the refineries as well as these OMCs. But on the other hand, there is a possibility that crude can move up some more from here. In fact, in case it moves beyond 70, 75, then it could be negative for the OMCs. So we need to keep both these things in mind.
Okay. All right, Amrish, we'll leave it on that note. That was a really insightful session. So thank you for that. For our viewers who want to access these kind of actionable insights daily, do check out Money Control Super Pro, where market expertise meets technology. You can subscribe now and get ad-free, data-rich and globally connected experiences. Here's a festive bonus. 10 lucky subscribers every day stand a chance to win gold coins. Just scan the QR code on your screen or download the Money Control app to know more.
All right, let's wrap down then on the markets for today. We go with solid gains, and it's good. After a while, we end with gains closer to the high point of the day. So 26,000 was within kissing distance and a little shy of that. What did well? SBI Life, good set of numbers, valuation support. The street likes it. Grasim, up close to around 3%, maybe some kind of positive rub-off. That the companies that it holds taken are doing pretty okay. Novelis should turn around. That is good. And also Vodafone Idea may not be in that big trouble. So that's good as well. Bharti Airtel, positive rub-off. There's going to be some kind of leniency to Vodafone Idea. Maybe they also get some kind of leniency. Stock is up 2.5%. SBI and Reliance Industries, both of them led the way up. Then they went through a bit of a break. And now they're doing the heavy lifting. So good uptick is what we're seeing on both of them. What didn't do too well then? From the Nifty pack itself, we had Kotak Mahindra Bank that was down 1.5%. Various fears with regard to the numbers, valuations, and will they look at IDBI banks, very seriously? Some part of the street believes that it will be very, very dilutive. Infosys, in fact, there was an X date with regard to the dividend. That's why that stock actually appeared down. So X of that, it was more